I've looked into short-term loans before, especially options like Cashfloat and payday loans, and here's what I learned: quick, honest, and practical. When you're short on cash, payday loans look tempting. Fast approval, instant money. But from my experience researching them, the biggest problem is cost. The interest stacks up fast, and if you miss a payment, fees can spiral. That's how people get trapped. Cashfloat is often marketed as a safer alternative to payday loans. From what I've seen, it can be better in some cases. The repayment terms are usually clearer, and you're less likely to face extreme rollover fees. But let's be real, it's still a high-cost loan. You're paying for speed and convenience. So, what are better alternatives? First, credit unions. This was the biggest eye-opener for me. Credit unions often offer small emergency loans with much lower interest rates. Approval can take a bit longer, but the savings are worth it. Second, salary advance or employer support. Some workplaces offer paycheck advances or hardship funds. It's not advertised much, but it's one of the cheapest options because you're not dealing with interest-heavy lenders. Third, buy now, pay later for essentials. Used carefully, spreading the cost of necessities can be cheaper than taking out a high-interest loan, but only if you're sure you can repay on time. Fourth, borrowing small amounts from trusted family. Not always comfortable, but from my experience, it beats paying triple the amount back to a lender. So, Cashfloat versus payday loans. If those are your only two choices, Cashfloat may be the less risky option. But the real lesson I learned is this: the best alternative is avoiding high-interest loans altogether when possible. Quick reminder, if you're under 18, loans like these aren't meant for you. Always talk to a parent or guardian first. This isn't financial advice, just what I've learned from researching and comparing these options, so you don't have to learn the hard way.